Okay, well now we're going to move on to Brad Wolff, who's going to talk about using Encyclopedia on the opening range and up to midday.
Thank you, Richard. So, one of the first things I want to talk about is false beliefs with parts of trading. And some of these slides are from the video course. But the reason why I chose this slide right here is when you look at trading, it's very easy to want to memorize a bunch of slides or look at the encyclopedia from the perspective that if you just learn everything in the encyclopedia and memorize it, it will help you with trading. And that's true. But one of the things I would argue is the first thing people should focus on is learning the video course. So since I'm talking about trading the open, the following slides, I'm going to talk about things to understand about trading the open and how to reference the video course. So the first thing, before I talk about the open, I want to talk for a second about binary decisions. And this is a simple flow chart that I made. And I'm a real big proponent in flow charts and just trying to train your brain and think about the market from the standpoint of binary decisions. So we've all seen a version of this in the video course or the books. The market's either in a trend or a trading range. And the goal, the way I see binary decisions is one of the most important goals with trading is to right here reduce the number of decisions that you have to make at any given time. So if you can distill down really quick to is the market in a trend or a trading range, you will have a better idea on what to look for. And the key with this is to prevent this right here, analysis paralysis. And here's an easy example. This is from the video course, but the market's either in a trend or a trading range. Always in is another way you can think about binary decisions. So if you're looking to buy here, would you rather risk 4 points? Would you rather buy risking 4 points to make 4 points or sell risking 4 points to make 4 points? So that is another way. That's one of the reasons why always in is so important. Another thing to remember that I kind of see it as binary decisions is bar numbers and what bar you're on relative to a 5-minute chart. So we all know the first bar of the day, there's a 20% chance that the market's seen the high or the low of the day. However, by the first hour, what's the probability that you've seen the high or the low of the day? And that's one of the reasons in the blogs that I say so often most traders should wait 6 to 12 bars is if you wait, you will give yourself higher probability. So if the market often goes sideways on the open, let's take the first bar on this chart. Does it make a lot of sense to sell below bar one? You know it's low probability and there's a 20% chance. So if you just always assume on the open that the first half hour is going to go sideways or have a lot of overlap, you can save yourself a lot of bad trades on the open because typically it's a limit order market. Next, I want to talk about how to actually use the encyclopedia. This kind of goes back to what I was talking about a few minutes ago. The first goal with trading is you have to figure out how to read price action. And another way to view that is you have to understand what your edge is in with trading. And an easy way to do that is start with the video course. So I would suggest before someone dives into the encyclopedia, really ask yourself, do you really understand the video course? And you can break the video course into sections, fundamentals. If you want to learn about trading the open, really study trading the open and learn what are the key characteristics to look for in the open. Because if you know what to look for in the open, you'll be more prepared to look through the encyclopedia and know what to look for. Most people have trouble using the encyclopedia because they don't know what they're looking for. Once someone has studied the video course and at least has a strong enough grasp to understand what to expect, such as when they're trading the open, the next thing they should focus on is this right here, the index of the encyclopedia. So if you go to the encyclopedia website and you scroll to the bottom, you'll see download the latest and you'll see a big spreadsheet. This is the first thing I would start studying. So I'm going to go to the next slide. Here's an example of gap up and gap down. Here's an example of a bunch of gap up pattern, a bunch of gap up examples. And the first piece is, instead of going through all the parts and just memorizing where everything is, learn how to spot things and be able to look it up. So for me, if there's a big gap up or down on the day, I'm going to pull up the index, scroll to here, and try to distill down which is the most likely. So if it's a trend from the open, I'm going to see gap up and trend from the open right here. And then I'm going to look right here, and I can go to, there's the shortcut, and then I can decide, is it a trend from the open? Is it a trend from the open bull trend that's going to reverse? Is it a trend from the open that's going to form a trading range? Now I have 3 logical ideas on the open. So now I'm going to talk about the opening range. The first thing to remember on the open is context is less important. Lower probability things are more common on the open because the market's searching for support and resistance. So always remember that low probability events are pretty common on the open of the day. Next, here are 4 common outcomes on the open: double tops, double bottoms, wedge tops, and wedge bottoms. If you've read the blogs, you'll notice that I pretty much say this every day, that if you're looking for the opening swing, it'll often happen after a double top or double bottom or a wedge top or wedge bottom. So be prepared for one of these patterns on the open. And what do these patterns mean? These patterns mean that just about every open of the day is going to form some kind of a trading range. Double top, double bottom, wedge top. All of them are a type of trading range. Here are 3 important building blocks for trading. And it's pretty similar to what we just looked at: wedge bottoms, wedge tops, double bottoms, and then breakouts. You're going to see one of these patterns form on the open. Now, the most important is to expect one of these right here. Next, I want to tie in binary decisions when you're trading the open. So if you think about it, if you've read the books or watched the video course, you know there's really 3 common outcomes on the open. You can get a bull trend from the open, you can get a breakout mode, or an opening reversal. You're going to get one of those 3. So if I'm trading the open, the number one thing I want to do, just like that binary decision tree I showed earlier, I want to break down and quickly figure out which one of these is most likely. So if it's a bull trend from the open, I want to start thinking about characteristics of a bull trend. Or is the breakout strong? Does it look like a small pullback trend? Are there gaps? What is most likely? Next, once I figure out which one of these is most likely, I can begin to think about Encyclopedia. What are some Encyclopedia examples? So if it's a trend from the open, I'll go to the gap up, trend from the open, and start looking at examples of that. If it's a breakout mode, maybe I go to part 1 and look at breakout mode examples. And if it's an opening reversal, I'll look for maybe gap up and buy climaxes or opening reversals. And again, here's an example from the video course of 3 common outcomes: trend from the open up, trend from the open down, breakout mode here and here, and then an opening reversal. So the first one I want to talk about is a bull trend from the open. Probably the single most important thing to remember on a bull trend from the open is 60% of the time it's going to evolve into a trading range. That means 20% of the time it lasts all day, and 20% of the time, in general, you get a reversal into an opposite trend. So the key point is most trend from the opens they have a lot of trading range price action at least some point in the day. Another thing to remember about trend from the open trends is 80% of the time, I call this kind of the 80-50 rule, and it's the same. We've all seen it in the video course, but 80% of the time you will get a minor reversal on a trend from the open. So a rally, minor reversal, 80% chance of this on the open. 50% chance you get a major reversal of the initial move. So we have a bear sell-off, 50% chance it completely reverses. Bear trend, 80% chance there's going to be a minor reversal. And these slides that I'm showing, the past 3 or 4 slides that I showed, these are just easy. You can print them out, you can put them on your desk, and you can just kind of remind yourself and remember 80% chance when you get a breakout on the open, there's a minor reversal, 80%, 50% chance there's a major reversal. Another thing I want to talk about is breakout mode. Most days are going to form some kind of breakout mode pattern. And the way I would think about that is whenever you have a breakout mode, look to first, you want to measure how big is the range. And if you've had a failed reversal up, failed reversal down, and you look at the range and you say, it's not that big relative to the prior days, you're probably going to get a measured move up or down. If the range is really big, it may not form a measured move up or down. But you can see we went sideways for about the first 18 bars. We got an upside breakout and a measured move up. Here, sideways for a lot of bars, strong bear breakout and follow through, deep pullback, and then a measured move down. And again, here's another example of 2 common examples for a opening range situation where you get pretty much a small breakout and then sideways. And here you get a bull breakout. So you can call it a breakout mode pattern, but the point is you do not have to enter breakout mode on the first bar. You can get a small breakout for a bar or two and then go sideways for a lot of bars and then enter breakout, or you can have a breakout mode here and then get a strong upside breakout. So next, I want to talk for a minute about opening reversals. It's common to get an opening reversal after some form of test of support or resistance. So a rally to the moving average, a sell-off to last week's low, sell-off to yesterday's low. And the key point with opening reversals, which I'll show in the next slide, is 50% of the time you can get a reversal of a breakout. So strong sell-off, and even though it looks strong, it was just a sell climax test of yesterday's low. Strong rally, but it was a vacuum test of yesterday's high. Breakout on the open, another example. 50% of the time, no matter how strong the sell-off or the rally is, it can reverse. Here is an example of what I was talking about. Whenever you have a breakout mode or an opening reversal situation, if the range is not that big, you can get a measured move and even a strong bull trend. For those of you that traded the E-mini today, if you remember back, the sell-off was rather big. So when we did get the opening reversal, I believe it's around bar 20 or 24, the market got back to the open of the day, but it could not get a measured move up. One reason for that is it was more like this. The range was too big. And here, I want to talk for a minute about gaps. Whenever I see a really big gap, or really any gap that looks bigger than usual, I'm instantly thinking about this section in the index. If there's a gap on the open, I want to start to narrow what type of gap we're going to get. And here's just some easy probabilities to remember when you get a really big gap on the open. Next, I want to talk about trading the middle of the day. In the middle of the day, it's really important to decide, is the market different from the opening structure? So depending on the type of day you have, if you get a bull trend from the open, pay attention to that slide I showed earlier right here. Is the market, if you're in a bull trend from the open, are you reversing down into a trading range? Are you reversing down? Is the market completely reversing the move? But anyways, here are some easy examples of midday reversals or changes in the structure. And even here, we had a trading range on the open and nothing changed. So really, you can call the open and the midday pretty much the same structure. And I've already talked about that slide. The other thing I look for is if there's a trend from the open, I want to measure, is it a leg in a trading range or a leg in a trend? So how do you do that? Think back to the video course. Are there open gaps? Are the gaps closing? Is the breakout strong? Is it look like a small pullback trend where it's really hard to buy? I'm always trying to put myself in the position of counter trend traders. So if I'm looking at a sell-off, I'm always thinking, how easy, if I'm a bull, can I buy below bars and make money? And if I'm a bull and I'm constantly losing, buying below bars, I know I should probably sell. That is different than this. So if I can decide that bulls are making money here, I can start to go to the encyclopedia and look up trading ranges or look up gaps closing. Here, if it's a small pullback trend, I can go to small pullback trends. Next, when you have a trading range early on the open, the key thing you want to look for is you want to look for signs of strength. So, did you get a bull breakout with follow through? That'll probably lead to a second leg. If you're in a trading range, do you have a strong bull bar and a follow through bar closing above or below a lot of bars? Are traders getting trapped? And that is the end of this presentation. But one of the things I want to leave you with is, again, when you look at the encyclopedia, it can be daunting to figure out how do you use it. The first thing I would challenge you to do is go back and figure out how do you, what do you know from the video course? One of the things that I like to do, I'll go back to the slide for just a second, is think about things from a decision tree. So if I have the video course, I can look up trading the open and I want to make notes on what's the most likely event. Then I want to study that and make it muscle memory. So on the open, I'm always thinking about this slide. And my goal is to distill down, is it a trend from the open? Is it a breakout mode pattern? And is it an opening reversal pattern? If I can figure out one of those patterns, I'll be in a lot better shape to be able to use the encyclopedia. And that is it for this presentation.
Thanks, Brad.